Hey guys, what's going on? March 4th, and today, as we predicted, the beginning of the crash. Now, sometimes they don't happen early in the morning, and for those of you that saw this big spike and you're like, oh, what the fuck? We're supposed to have a crash. I'm jumping out. So you cost yourself a lot of money. As you know, the strategy right now that I was trying to explain in yesterday's video is to simply short the damn bounces. If you don't understand what shorting a bounce is, guys, and a lot of guys that have natural tendencies to just stay bullish all the damn time, they're conditioned to buy the dips. Well, shorting the bounce is the exact opposite of buying the dip. Basically, when the market is in a downtrend, which it is at this point, the market is in a severe downtrend, even though when you're looking at the chart, it doesn't appear quite so yet. But it will be apparent to everybody that the market broke the uptrend in the next 24 hours, and we're going to go substantially lower. As a matter of fact, we're trading on S&P futures at 37.93 right now. We're going way lower. I mean, Tesla is at 617, guys. Baidu at 264. Jesus, we recommended shorting this thing when it was in the 290s yesterday. So got a lot of traders up about, 600, 700% on this trade right here, guys. There's actually a ton of trades that you could still catch right now. But the question is, do you know what the fuck to short? Did you jump out right here on the bounce? Because we send out multiple alerts to short the hell out of the bounce right here when the market was marching high, guys. So understanding what is the right type of decision comes with understanding of the 13 markets move formula and the charts divergences, guys. So if you are the person that jumped the fuck out of these great bearish trades when the market bounced, barely 20 points against the trend. Now, again, the trend, it's a bearish fucking trend right now. Okay, so imagine a clock. The clock is ticking and it's going in a certain direction. And all of a sudden, the clock breaks for about 20 minutes, and let's say instead of showing 3:50 p.m., it goes backwards, and now it's at 3:30. So basically, I want you to think of a downtrend in the market as a counterclockwise movement. So let me pull up a visual of a clock here to explain it a little bit better for you guys. For those of you that may be struggling with shorting the bounce, or maybe you have fears when the market moves just slightly higher, you freak out, you jump the fuck out of a good trades. So, by the way, some of the trades clearly we've been on was like BKNG down 75 bucks. You could have gotten in yesterday at 100 bucks higher, no problem. You would have been up 400-500%. Let me show you the clock, so hopefully we'll get the point across.
6% today.
Okay, guys, so basically here's an image of a clock to help you visualize this a little bit easier. Basically, when the market keeps moving higher, okay, so you've got a bullish momentum higher and you've got a bullish uptrend, the market's going to do this. When you have a reversal that is not apparent yet to the markets, that there is a bearish trend reversal opportunity, the market still appears to most like it's doing this. And so most of the people are conditioned to buying the dips. Every time the market dips in the uptrend, they want to buy the dip. Now, there comes a time, as I've shown you in the last video, that the market is doing this, which is a topping formation. And it's very important to catch this because that's where fortunes are either made or lost. And now the market is going to go into this. That's why we posted this market crash prediction for March 4th. And so the idea now is for you to acknowledge that the strategy should be exactly the opposite of what the market has been doing and what most of the traders have been conditioned to doing, which is buy the dip. Now you want to focus on shorting the bounces. So the reason I have the picture of the clock, because the clock is going to move now that this motion of markets moving lower is set. The clock is only going to go in this direction, okay, overall. Now, it does not mean the clock cannot pause. So, for example, in this particular case, we're 25 minutes past 2 p.m. Well, what's possible in the market clocks is for this to actually get back here 25 points back to 2 p.m. But it's going to resume, the clock is going to resume ticking again in this direction, which is going to coincide with this trend. So when the market overall is dropping and then all of a sudden it's pausing and moving higher, it's not reversing the way the time runs on the clock. All it's doing is just temporarily pausing or reversing it by 25 minutes. To help you visualize this a little bit better, let's get back to what has actually taken place in this beautiful Move 11 formation today, and you'd be able to see that this is exactly what took place. The market bounced 21 points counterclockwise. Again, the key word here is counter. At this point, any move higher in the market is a counter trend, because now the trend has shifted from this to this, and now what you're dealing with is any bounce is a counter trend movement, such as would be in the clock that's sticking continuously this way. It would be a counter movement back, as if the market is trying to save and reverse time for everybody to get the hell out on the bounces. And that's exactly what it's doing. It should use this opportunity anytime the market goes in a counter trend. In this case, it would be the bounce. You should be using this opportunity to short or buy puts in this case. Damn, it's taking me so long to draw this. But you get the point.
More new lows
Buy the fucking
here,
puts on the bounces.
Just below the 120 level, that sticker.
Okay, so basically, the market drops. You're like, okay, everything is cool. And then it goes counterclockwise, guys, 20 points. So the market goes roughly about 25 points positive for the day. And this is where we scream at all our alert subscribers is add to the positions, buy the puts right here on the bounce. Now, you may think like, why the hell would I want to do that? Because apparently at this point we are above the level where the market initially bounced at in the morning. So everything looks like it's a V formation that's ready to rocket higher. Sometimes the markets will do these overshoots, and the way you would easily nail this is by understanding, based on the VIX components, the chart patterns, and divergence, this was going to be a move 11 with a sharp sell-off going into the end of the close. And so this was an ideal area to add. So if you were jumping out here, guys, when the market was hitting 38, 40, 38, 43, this was actually the ideal entry or the ideal point to add put positions. And when I say put position, it doesn't necessarily mean that you're trading SPY only, which is down 60 points at this level right now. But, you know, we're targeting the next level at, 36.94. That's just going to be a pause. It's not going to be, and from there we can see a counter clock movement to the upside again, but then you'll see another movement lower from there. So don't get fooled by this market. Understand that when the market does this right now, it's a counter clock movement, which you should be taking advantage of. It's just like the clock reversing time for about 25 minutes and gives you a chance to short the fucking market. What should you do? You should waste no time and short the damn market. So if you're struggling with this, if maybe you're exiting trades that are good, solid trades on the bear side at the wrong time, it's all psychological, guys, and you need to get a much better understanding of your calculations. When do you want to stick to the position? When do you want to sell? When do you want to add? When do you want to get in? 13 Markets Move formula will help you do that. Now, the easiest way to do this is, of course, to get a coach with 13 Market Moves. We help a ton of guys take their accounts to the moon, and we're 100% confident we can help you do that the same. If you're coachable, if you're willing to learn, and if you're ready to take action when action is required to be taken. So with that said, if you're wondering, well, how much lower can this fucking market drop? Oh, what should I be shorting now? Or when should I be entering my trade next, guys? Click the link below. We can help you answer all these questions right now. Get you on the right side of the market. Guys, click the link below. Schedule a 20-minute coaching call. Let's roll. I'll catch you on the next trade soon.